The next presentation is from emerging copper and iron ore company, CuFe, with the ticker code CUF. To tell us more, I will now hand you over to Executive Director, Mark Hancock. Good afternoon, Mark.
Yeah, thanks very much, Jane. Yeah, appreciate the chance to join again. I think it's probably been about 6 months or so since our last update, and we went under the moniker of CuFe Limited back then, but we've picked up some copper assets in the intervening period. So we changed that over to CuFe to reflect that, and we've also managed to get our first shipments out and survived another up and down roller coaster in the iron ore market. So it's been a busy period. I'd like to step everyone through it all.
Wonderful. I look forward to hearing. I'll bring up your presentation now.
Yeah, thanks. Just jump forward a couple to the. Yeah, thanks. Yeah, look, I'll talk to these in more detail as we go through. Sort of started already, I guess, but just highlighting that our two key planks are really having exposure to high grade, premium quality iron ore, which we direct ship and sell currently into the currently a buoyant market, and emerging exposure into a mature copper gold play in the Northern Territory. A company chaired by Tony Sage, sort of mining veteran, done lots of deals, got lots of access to capital and contacts, and then most of the rest of our management team, including myself, ex-Atlas Iron guys, formed part of the executive management there for many years. So we're quite familiar with getting projects up and running, and got a lot of contacts in the steel industry and in the trading environment that we've leveraged off to get ourselves started with this company. I've been involved now for a couple of years, and we've transitioned from basically a passive explorer, in non-operating joint ventures or having royalties to now running mines and seeing the path to bring several others into production going forward. This just shows quickly the location of the projects. I'll start briefly with the copper ones, given we put the CU first. So you can see there Tennant Creek and also our Bryah Basin projects. Again, I'll talk to those on the next slide. So in Tennant Creek, we've acquired a mature package of ground which had been owned up until 2020 by Evolution. They'd taken it as part of the breakup of their joint venture in that area with Emerson Resources, and had chosen this as the ground that they wanted to keep when that joint venture was ultimately distributed. The ground's been mined historically for many years, probably not since about the mid-1990s, so going back quite some time. But there's still remaining reserves there, resources I should say, of 6.6 million tonnes at 1.8% copper, and 31,000 tonnes of the contained copper there, which there's a total of 222, but 31,000 of that's at the Orlando deposit, which we believe is amenable to an open cut cutback of the existing pit, so we can access some of this residual ore that's remaining there. So that's been our key focus on this area at the moment. Just also on the map there, you can see the Gecko and Goanna areas. They're areas that have got considerable potential as well, both in terms of exploration up at Goanna, and in terms of residual resource at Gecko. So this sort of just gives us a bit of a schematic. You can see the open pit there on the left of screen, and the schematic about how we can sort of cut back the existing open pit and access some of this material that previously would have been considered as an underground mining opportunity. But obviously copper price is dramatically different than what they are, what they were then, and we think that's opened up the opportunity to look initially at open cut. Ultimately, we would consider also looking at further underground mining in the area. But as I say, for starters, we think that the open cut is the easiest pathway for us. There's been a number of other people sort of rediscovering the Tennant Creek area in recent times, and we've seen groups like Emerson and Tennant Minerals recently, announcing some quite impressive copper hits. So yeah, we think that while it's a mature area, there's certainly a lot of exploration opportunity remaining in the region. So since we've got involved, which is only about 4 or 5 months, we've been very active. We're basically going back and reviewing and cataloguing and prioritising the testing of the existing diamond core. We've mapped out a drilling program to supplement the core that's available. We've got the approvals in with the Northern Territory government for that at the moment, and we're also working through the process with the other key stakeholders, obviously the Indigenous groups, the pastoralists, to enable to get ourselves boots on the ground there pretty shortly, which obviously with West Australian borders opening up is also a little bit easier. It's been a little bit challenging over the last 6 months, but looking forward to be able to spending more time on the ground and really getting to push the projects along nice and hard. Just briefly before I move on to the iron ore on the copper, we do still have some residual non-operated JV interests in the Bryah Basin in and around the Sandfire projects. Sandfire operates some of the joint ventures, as do other parties, including Aurus Minerals, who saw announced last week that they're starting some further drilling in and around the Forest project at the moment. So passive positions for us, but we've got good exposure and free carried exposure to some activity in the hands of some good operators down in that neck of the woods. So the iron projects, the one that's in production is West Wiluna, and then Yarram up in the Northern Territory is one that we'll potentially get to in the near future. So let me start with West Wiluna. So yeah, basically, as you can see from this, we've got a resource at this project of about 10.7 million tonnes, and it's 63.7% Fe, so extremely high grade ore. And basically what we're trying to do is focus on a value driven mine. We're not really looking for volume. It's quite a long haul from the coast, so we don't want to be taking anything to the coast that's not a high grade. So as I say, our focus is very much on prioritising both grade and also where we can lump material, because there's a significant premium that's attached to lump material. And as I say, I think it was about August last year that I presented. So at that stage, we were basically just opening up the mine. So we'd started work on the ground in May, following a receipt of our final approvals. August, we'd opened up the mine. September, we were trucking ore into the shed, and by October, we were shipping ore. So pretty remarkable turn times to be able to bring a project into operation within sort of 4 months of starting, and also only spending about $5 million on the project. So I think it demonstrates our execution capability, and the operations of the mine have proceeded pretty smoothly subsequent to that time as well. So I think because we have got a team that's got a lot of operating credentials, it's really started to show the benefits of that as we've been, developing and operating the project. We're trying to do about a ship a month. We ship out of Geraldton Port, so probably about 60,000 tonne vessels. But yeah, as I say, focus on high grade material. The sales side, the iron ore market's very volatile, in recent years, and even over our 6 months of operation, we've seen that. I think when we were commissioning, the price was nearly $200. It was then down into the 80s in our first quarter of operations, which is a challenging number for us, and it's now back at $160 odd. So basically the way we've tried to sell, is actively use financial instruments to provide us protection. We had a significant hedge gain in Q4 as a result of that drop in price. And with the price rising up again over the last month or so, we've had a chance to now reset hedge positions into the next 6 months. You can see a summary of them there, but we've sort of got swaps at $150 odd US a tonne, and a series of collars that have a floor price around $120 and participation in uptick up until $162. And those are just hedging the 62 index. So any lump premium or any premium of grade above 62, we benefit from that directly. You can see there, because we have got a higher cost of operations, primarily driven by our trucking, our break-even cost with high lump premiums at the moment is probably around $100. In a world of high freight or lower lump premiums, it probably pushes up a little higher. But you can see that we've now managed to hedge off a decent percentage of this next 6 months production at prices that are well above our break-even levels, and gives participation, considerably more above that. Probably one of the key messages for the presentation is this slide, I think. So you can see there the share price in the black, and the iron ore price in sort of orangey brown. And basically, as we started production in the June-July period, you can see the market responded well to that. And unfortunately, we were hit by this big fall in iron ore price. The share price fell down reasonably sharply on the back of that. What's happened in the subsequent 3 months or so this quarter is that we've seen the price really push back up quite significantly, and as I mentioned, lump premium also has pushed back up significantly over that time. And the share price hasn't really responded. So to me, there's a value gap there that's sort of, I guess because of the volatility, perhaps people are reluctant to recognise that value, but definitely at these prices, the company generates a substantial amount of cash flow, and we'd expect that as we see that coming through the bank, the market will adjust the pricing of the company accordingly. One of the other key things, sorry, just one further thing on that one, sorry, is the amounts that are starred there, which is the realised prices for our cargoes. What you see with a number of the iron ore producers when they're reporting results is they're saying they realised, X percentage of the index, 70%, 80%, 60% in some cases. You can see there for our 3 shipments today, we've been averaging well above 100% of the index, and that reflects the dynamic that I talked about, that we're a high-grade producer, we've got lump premium attached to our product, and also we've got good relationships in the market. So I think those factors have enabled us to price significantly above index, which is something that offers us a lot of value and helps to drive our cash flows moving forward. Thanks. So yeah, just briefly to wrap up with Yarram. It's a project that we think's got a lot of potential. It's located, only about 100 kilometres from Darwin Port, where there's quite a bit of spare capacity, and can take bigger vessels than what we're using at Geraldton. So we'd end up with more competitive freight rates. You can see down the bottom there some of the historical drill intercepts from prior owners. We've had 100 odd metres at 65%. We think it's probably not a large project. We've got an exploration target on there of 4 to 6 million tonnes based on that historical drilling. But with the location close to port and with our demonstrated ability to bring mines on very cheaply, certainly if this mine was in production today, it'd be a real gold mine, so to speak. So our key is to do some further exploration and approvals work to try and bring this into production as soon as we can. We did drill a few holes before the wet season, just to start to try and confirm some of those historical intercepts, but primarily to step out. You can sort of see the proposed drill program that we've got approval in place for there. It's primarily stepping out down from the past drilling to try and grow that exploration target, and ultimately, obviously, convert that into a resource. So I was hoping to have those results through by now, but the lab's a little backlogged. So in the near future, we'll be able to give the update of those few holes that we did get done before the wet, and then basically doing some targeting work now using some ground mag, and then we'll get back in on with the drill rigs there again once the wet season finishes in the next month or two. I think the next slide is really just largely recapping around the positioning of the project there and its location. Proximity to key Asian markets is one of its attractions. So I think just to wrap up, plenty happening. Tennant Creek will be getting on the ground, basically doing some exploration evaluation type drilling while we continue to progress the approvals and feasibility study work on bringing that back into production. We'll continue to try and maximise the cash flow from our JWD project, which will help us to both fund the existing project suite and also look for other opportunities. And at Yarram, as I mentioned, basically do this targeting work and then get in and do some further exploration and approvals and evaluation with the view to try and get that into production as well. Meanwhile, keeping an eye out for other opportunities that we are seeing people come to us and seeing that we're doing a good job with getting this other mine up and running and looking at how we can get involved in some of their projects. So that's something that we continue to evaluate. So I think that's a bit of an overview of things, and appreciate the chance to update everybody.
Mark, thank you for the great presentation. It's always great to have you on Broker Briefing. We've got a question that's come through just on the thematics. So where do you see the iron ore market going in the future, and will it impact on the projects despite the hedging?
Yeah, look, obviously the iron ore market, as I said, is very volatile. I've been sort of selling iron ore now for 15 odd years, and I'm still surprised fairly regularly with the direction that it goes. I think at the moment there is positive thematic, certainly. I mean, we're seeing a lot of demand from outside of the traditional main markets. So we're selling pretty much into Southeast Asia primarily, rather than say China and Japan and Korea as historical main markets. I think that obviously there's a pricing point that most of the smaller scale projects need to work, but with the demand dynamic that we're seeing, and also with supply constraints, Brazil supply is consistently under delivering, and there's not many new mines of scale coming into the market. So yeah, we believe there's a very positive dynamic that smaller players can take advantage of if they can move quickly and get into the market. So that's what we're all about.
Well, thank you for that, Mark. I do note there's quite a few questions that have come through, but we have run out of time. So I would encourage shareholders to reach out to Mark directly via the contact details on the bottom of the ASX releases. But thanks again.
Thank you, Jane. Bye.